This is Horizons Middle East and Africa, our top stories this morning. All for one, Volodymyr Zelenskiy will seek to pin down U.S. security guarantees as Donald Trump hosts the Ukrainian leader and European allies, with Trump focused on Russia's territorial demands. Investors await those Trump-Zelensky talks in Washington for clues on market direction after the U.S.-Russia summit ended without new sanctions or oil trade restrictions. And hundreds of thousands of Israelis protest Benjamin Netanyahu's plan to expand operations in Gaza, with the prime minister suggesting calls to end the war would embolden Hamas. It's just gone past 8 a.m. across the Emirates, 6 a.m. here in Johannesburg. I'm Jennifer Zabasaja in for Jumana Bersechi, and plenty of news that we are following, of course, after those talks on Friday between President Putin and President Trump didn't actually come out with much geopolitical tension, although there's plenty that the markets are paying attention to when it comes to that meeting later today between President Zelensky, European leaders, and at the White House with President Trump. But if we take a look at equity futures right now, we're seeing modest gains at the moment, especially if you take a look at U.S. equity futures, S&P futures marginally up right now, and that is coming after we saw at least the three major indices last week close up for a second straight week. But of course, plenty to watch for later this week. It's not just the meeting happening today at the White House. There is, of course, the Jackson Hole Summit, where many investors are watching closely for what we get from Fed Chair Jerome Powell during his speech on Friday. Right now, 10-year yield coming down ever so slightly at 4.31 there. Brent crude is unchanged, but of course we've seen crude fluctuating quite a bit since that meeting between Trump and Putin on Friday. But as I was mentioning, there is no major geopolitical escalation. No, it's not looking like there's any supply disruption, at least in the near term. So Brent crude right now at about $65.85 a barrel. And we are seeing safe haven demand increasing, that helping to lift gold to start the week. Gold is up just over 0.3% there to trade at about $3,348 an ounce. And just to bring you our terminal chart of the day, it is, of course, focused on this all-important meeting that the world is watching, and that is the White House meeting. But it's also focusing in on the probability of a truce, which many people are paying close attention to. And as this chart is showing, the probability of a truce actually remaining the same following that summit between Trump and Putin. So the question is, what breakthrough could we potentially see with the meeting between the leaders, the European leaders, and Trump later today? But let's check in on how markets in Asia are faring. Min Min Lo is there in our Hong Kong studio watching very closely. Min Min, what have you got?
Hey, Jen. Yes, we have Asian stocks looking a little bit firmer today as we look ahead to that Trump-Zelensky meeting. But we are seeing the Kospi losing about 1.2% here, led by the declines in the chip sector following the losses among their U.S. peers last week. But the Nikkei is up by 1%. Certainly, we are looking ahead to Jackson Hole as well. The comments out of Ueda and Jay Powell possibly going to have implications on the rate hike expectations in Japan, especially after Scott Bessent's verbal intervention last week saying that the BOJ is behind the curve in addressing inflation. Of course, we have the CPI data out of Japan later this week expected to show sticky inflation above 3%. We also have the 20-year bond auction later this week as well, tomorrow, in fact, and that's going to continue to put pressure on Japanese bonds. We are seeing yields ticking up as well. But flip the board, take a look at what is happening in China, because we are seeing a very, very interesting picture emerge here, because we continue to see this melt up in yields, this rotation from bonds into the stock market, because the CSI 300 is still pointing up 1.5% now. The Shanghai Comp 3740 is where we are now. That's above the 10-year high. We continue to see this exuberance in the Chinese stock market despite the weak activity data that we got last week, despite the weak credit data. It's almost as if all of that weakness didn't happen, and investors really shrugging past all that weakness, perhaps interpreting this as more signs that maybe more stimulus could be coming from the Chinese government.
Fascinating price action there. We'll check back in with you in just a bit. Min Min Lo in Hong Kong for us there. Let's turn back to our top story, though. Bloomberg has learned that Ukrainian President Volodymyr Zelenskiy will seek to pin down possible security guarantees when he meets with President Trump at the White House later today. Unease hangs over Kyiv and its allies, with sources telling us that Trump is set to focus on territorial concessions demanded by Russia.
It's important that America agrees to work with Europe to provide security guarantees for Ukraine, and we are very thankful to the United States and to the President for such signal.
Since the beginning of Russia's brutal invasion, Europe has been at Ukraine's side, united, and we will support you for as long as it takes, for just and lasting peace. And this peace must be achieved through strength.
And Bloomberg's Oliver Crook is joining us now for more. So, Oliver, let's just start maybe with what these leaders are walking into this meeting thinking. What is security guarantees if we take a look at it from the perspective of European allies?
Yeah, so when we sort of look at what happened on Friday, this meeting between Trump and Putin, and many commentators here in Europe and many of the leaders here in Europe will have looked at that meeting very sort of unfavorably. The fact that there was that red carpet rolled out for Vladimir Putin really being brought out in some ways from isolation, sharing a podium with the President of the United States. In the United States, there was a lot of concern going into it. And after that meeting, it wasn't exactly clear what sort of definite principles had been agreed upon from that discussion and what concrete measures had been taken. We've gotten a little bit more detail from that over the weekend, hearing from a number of different envoys from the United States, from Steve Witkoff. We heard from Marco Rubio. And what we understand is the kind of most concrete thing to have come from this discussion is actually not a concession made by Russia or a concession made by Ukraine, but seems to be a concession that could have been made by the United States. And this is about security guarantees. This is about providing security guarantees for Ukraine if there is a ceasefire, if there is a peace arrangement between Russia and Ukraine. What would that look like? What we heard from Steve Witkoff over the weekend was saying that this would be very close to a NATO-style Article 5, i.e. a sort of idea that if there's an attack on one, there's an attack on all. So you'd have effectively a kind of NATO-light arrangement that the United States would sign up to potentially in such an arrangement. Now, this is significant because this is something that the United States has basically failed to state explicitly from the beginning. From the very beginning of negotiations, the Ukrainians have been aware that any sort of deal with the Russians basically has no teeth and is not final unless you have some of those security guarantees. So we understand that that was certainly on the table, but that is something that the United States could have furnished unilaterally without any agreement from Russia, and that will certainly be one of the main focuses for the conversations today in Washington, D.C. between Volodymyr Zelenskiy, the president of Ukraine, Donald Trump, and a number of other European leaders who will also be there present, because, of course, any security guarantees would include not just the United States, but also European allies.
Yeah, and Oliver, I wanted to take it there next. I mean, what is it that Europe could potentially bring to the table, especially based on some of the conversations that you've been having?
Yeah, so listen, from the very beginning, we know that Trump is not interested in paying any more money in the support of Ukraine. So as far as footing the bill, that is going to be Europe's responsibility going into the future. They would like to still buy that American military hardware, but at the end of the day, it's the Europeans that need to pay. Where the conversation, Jen, gets a little bit trickier, and this goes down to a number of conversations I've had with a number of officials through the last couple of months, when we talk about this coalition of the willing, which is these European nations willing to support Ukraine and potentially willing to be part of security guarantees going into the future, it's not clear what exactly they're willing to do. We've heard from a number of leaders that say that, yes, actually, we would commit our own national troops to Ukraine as peacekeeping troops, as monitoring troops, as potentially troops that would have to return fire if the Russians were to reinstigate a military conflict. But that is not a done deal across these European nations. Even the Germans, for example, now led by Friedrich Merz, obviously previously was under Olaf Scholz, has not said that he is willing to commit German troops in a sort of peacekeeping arrangement on the front with Ukraine. That is something that is actually very, very difficult for a number of these leaders domestically, particularly at a time in Germany, for example, where you have a far right that is polling now #1, bigger than the CDU, who has been very sort of reluctant, has been very skeptical of the support of Ukraine. So there's also these domestic pressures that need to be worked out. So this is going to be a very significant meeting. I would say we have all of these European leaders, from Ursula von der Leyen, the head of NATO Mark Rutte, Keir Starmer, Macron, Scholz and Meloni, all going to Washington, D.C. But at the end of the day, they have their own issues to deal with at home before they can commit anything substantial to Ukraine.
It's certainly a historic meeting to pay attention to. Bloomberg's Oliver Crook starting us off there. Ollie, thanks so much. Let's dig into the conversation a little bit deeper with Galip Dalay. He is a non-resident senior fellow at the Middle East Council on Global Affairs. Galip, thanks so much for joining us. Before we get to this meeting today, I want to start with what we saw on Friday and what, if anything, you think was accomplished or achieved by these two leaders.
I think first what the two leaders wanted from these meetings. The Putin clearly wanted the meeting. Trump wanted a deal, a deal and a ceasefire to be announced after the meetings. Obviously, the Putin got the meeting that he wanted. That's effectively ending the Western isolation of Russia, breaking the Western consensus on Russia, and probably he hopes that it's not only going to be Ukraine in talks between himself and Trump, but rather Ukraine turns into one subject among many other subjects. That's the other subjects includes from the nature, the overall nature of the relation between U.S. and Russia, how to improve it, and how to prevent the further sanctions coming down on Russia. So therefore, for Putin, the meetings should not be only about Ukraine. For Trump, obviously, he wanted a deal that to be announced. Right now, what we see, at least in terms of the initial outcomes, the Putin has gotten what it wanted, which was the meetings, and the Trump, in terms of what he has gotten, is still unclear. But what is so important, what is so significant at this stage, the normalization of the meetings and the like treatment with the Putin by the most important country in the world, which is the United States, or the most powerful country in the world, in the Western camps. And I think that meeting probably has paved the way for other meetings coming down the road. And finally, another important thing, that Russia always wanted to talk about the European security, not only Ukraine, but the overall nature of the European security order with U.S., not with Europeans. And thus far, it seems that Russia is succeeding in this goal.
Well, so then where does that leave the discussions around a ceasefire or potentially peace? Because Trump also wants to see Zelensky and Putin meeting in the near term. European leaders are against that. Is that not a part of the discussion right now? Is that what you're saying?
Well, the Trump wanted a ceasefire, and apparently the Putin didn't want a ceasefire. Instead, the Putin talked about a comprehensive peace agreement, which is unlikely to be achieved anytime soon. And I think one strategy that Putin is pursuing, the failure of getting a comprehensive deal, whatever that means at this stage, because that will involve some really tough questions regarding the territorial adjustment, regarding what the U.S. means by the security guarantees, the idea of the security guarantees that has been floated around, whether that means like effectively a NATO-like commitment without the NATO membership for Ukraine, or whether it is like just like an idea that is being floated without much teeth. But nevertheless, right now, the failure of this talk about a comprehensive deal, I think that Putin wants to blame Ukraine and Europeans for the intransigence, and then basically tell the Trump that it was them that didn't want a comprehensive deal, rather that Russia wants it, and therefore that it is time for the U.S. and Russia to even to reset the ties, despite the fact that there might not be a deal over Ukraine.
Galip, do you see the European leaders stepping in and potentially changing the calculus of where these talks are at right now?
Well, the trouble with European leaders or the European strategy towards Russia, towards Ukraine, is even though Europe has been talking about the plan A, plan B, plan C, but all of them come into the same idea, actually, how to keep the U.S. in the game in one way or another. I still don't see any European plans, despite all this talk about, or the formation of the coalition of willing, the formation or the idea that U.S. might not be in the game for long. Despite all these talks, I still do not see any European plan that is premised on the idea that the U.S. might be completely out of the picture. So the idea that I see is still gaining currency at the European capital, if the U.S. even withdraw in presence, can we have like the U.S. backstops for the European? So that's the first thing. The second thing that I see beyond, in a sense, offering the financial commitment, beyond offering further military equipment to Ukraine and further financial help to Ukraine, also buying more from the Americans' weapon market, I still don't see a workable European plan if the U.S. exits. If the U.S. is not in the game. So therefore, this is like really a drastic moment we are passing through for the European security, probably one of the most significant days that we are passing through since the end of the Cold War. And the tragedy for Europe, Europe is not ready for the game. Europe is not ready for the challenge if the U.S. is not in the game.
Yeah, unfortunately, we have to leave it there, but really appreciate your analysis this morning. Galip Dalay, non-resident senior fellow at the Middle East Council on Global Affairs. Thanks so much for joining us. And up next, we'll get the market outlook with Saxo as markets await talks between President Trump and Ukrainian President Volodymyr Zelenskiy in Washington. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Investors are looking ahead to President Trump's talks with Ukrainian President Volodymyr Zelenskiy for clues on where the markets head next. Traders are also staying cautious ahead of the Fed's retreat at Jackson Hole later this week. Let's bring in Charu, Chanana, Chief Investment Strategist at Saxo, joining us from Singapore. So, Charu, quite a bit for the markets to digest right now. Is there a single narrative that you believe is driving sentiment? Is it this meeting between President Trump and the European leaders later today?
Hi, Jennifer. Thank you for having me on your show. But certainly, I mean, if you look at it from a very tactical perspective, I think geopolitics has been one of the key concerns for markets. And with this meeting set up today between President Trump and Zelensky, I think it is going to be something critical, particularly for traders who are, in the oil markets, in gold, in European equities, the euro dollar as well. I think some of the assets are really linked to these geopolitical moves. What we can get out of that meeting, I think the bar is not very high, I would say. I mean, looking back and looking at what happened back in February when Zelensky was in the White House, I think that did not go too well. And that does suggest that the bar could be low. But clearly, President Trump is throwing the ball for a deal in Zelensky's court at this time. After that meeting with Putin last week, we do know that Putin and Trump have agreed to some kind of territorial exchanges and some kind of security guarantees. Whether or not that gets an agreement from Zelensky today would be the key point which the markets are really tuned into.
Markets, though, we're seeing equity futures and actually in Asia still pointing marginally higher today and stronger on the day. What would you say is behind that? Is it continued optimism over the trajectory of the U.S. economy?
I think today's session, particularly in Asia, what we've seen this morning is actually the China markets doing particularly well on the back of that, risk that the Russian oil imports that they're having will not be penalized further at this point. So that's been very positive for Chinese markets. Plus, they have some internal stories going on around, the earnings from last week. We also have some of the key players like Alibaba, Xpeng reporting earnings today. So the momentum there is still looking quite strong. We did have a bout of weak data last week, but I think that just kind of points to the fact that we could get more stimulus in China. We also looking potentially at a relief rally for Indian assets, where again this import of Russian oils has been a factor that has been acting as a bit of a headwind for that market. Japan has been doing extremely well today. Again, I think on the back of, yes, the US economic story that you mentioned. I think it's a good balance that we have right now in terms of the US macro story, where the economy is chugging along quite well. But at the same time, we still do have expectations of the Fed to go ahead with a rate cut in September. So that kind of obviously tactically helpful. But I think the broader thematic story around artificial intelligence, that is what is driving the markets worldwide right now.
What do you pay attention to then when it comes to Chair Powell's speech on Friday? If you do already believe that September is a cut, what are some of the tea leaves that you're looking at?
I mean, potentially, September looks very, very likely, but I would say that it'll be very hard for Powell to really be committed to it at this point. Of course, we've had certain supportive factors. We've had that softening of the labor market. We've obviously had a lot of pressure from Trump. We've had some pressure from Scott Bessent as well. And we've had that widening split within the Fed committee. That is all pointing towards a rate cut. But at the same time, if you look at the totality of data coming out of the US, it is not an all clear towards a rate cut. I mean, we've had retail sales still pretty okay. The PPI number last week was still higher. I think there is a sense that US corporates are for now not passing on the increased tariff cost. Of course, they want to kind of, feel the market. They want to take it slow, probably take a margin hit first, and then eventually pass on that higher tariff cost to the consumers, which means that inflation will continue to be top of mind for Powell. So I think he will remain non-committal. We also have a CPI report and another jobs report to come ahead of that September meeting. So it remains very difficult, I would say, for Powell to commit to anything. But yes, the market will continue to look forward to a September rate cut, given the kind of little bit of a softening trend that we've had in US data so far.
Where do you position then, Charu, right now, considering all these different factors?
That's very interesting. So I think if you are positioning for rate cuts, again, like I said, it's not an all clear towards a rate cut cycle. The traditional interest rate dependent sectors or the defensives that do well in an interest rate cut cycle could be interesting. But my sense is, like I said, that inflation would continue to be a problem. In that environment, what becomes more interesting is quality stocks that have a little bit of a pricing power. And what I mentioned earlier as well, the bigger thematic play has been AI, and I think tech continues to be a better play for interest rates as well, given their pricing power compared to something like defensives, again, because it's not like the economy is just falling off a cliff at this moment and you need to be in the defensive sectors.
Yeah, you say for tech, missing China's tech story will be like missing the internet boom of the 1990s. That's a pretty great quote there. We'll leave it there with you. Charu, Chanana, Chief Investment Strategist at Saxo. Thanks so much for joining us this morning. Now, coming up later on the show, Africa's second biggest aluminum smelter faces a possible shutdown next March. We'll get you the details. This is Bloomberg. Now, Air Canada says flights will resume on Monday evening after its flight attendants union defied an order to end a strike by Sunday. The airline canceled about 240 flights and says the walkout could disrupt 130,000 passengers daily at the peak of summer travel. The union, representing more than 10,000 attendants, is challenging the Labor Board's back-to-work order, calling it unconstitutional. And the Airbus A320 series is poised to overtake the Boeing 737 as the most delivered commercial airliner in history. Aviation consultancy Cirium says Airbus had narrowed the gap earlier this month to just 20 units, with 12,155 deliveries in total. Plenty more coming up on Horizons Middle East and Africa. This is Bloomberg. This is Horizons Middle East and Africa. Our top stories this morning. All for one, Volodymyr Zelenskiy will seek to pin down U.S. security guarantees as Donald Trump hosts the Ukrainian leader and European allies, with Trump focused on Russia's territorial demands. Investors await those Trump-Zelensky talks in Washington for clues on market direction after the U.S.-Russia summit ended without new sanctions or oil trade restrictions. And hundreds of thousands of Israelis protest Benjamin Netanyahu's plan to expand operations in Gaza, with the prime minister suggesting calls to end the war would embolden Hamas. It's just gone past 8:30 a.m. across the Emirates, 6:30 a.m. here in Johannesburg. I'm Jennifer Zabasaja in for Jumana Bersechi. And of course, many investors watching closely what that White House meeting later today between European leaders President Zelensky and also President Trump yields, especially after that meeting between Trump and Putin on Friday, didn't yield too much, at least, and it didn't yield any geopolitical escalations or any additional sanctions. But still, we're seeing equities, at least starting off the week, a bit stronger. U.S. equity futures marginally up right now, and that coming after we saw a second straight week of gains, closing the week of gains for the major indices. But it's not just that meeting later today that is squarely in focus. It is also a speech from Fed Chair Jerome Powell during the Jackson Hole summit that is coming later this week, where central bankers will be meeting. The U.S. 10-year yield backing off ever so slightly, coming down at 4.30% there. Brent crude also in focus. We were speaking a little bit earlier today with our guests about some of the main focal points between the meetings between European leaders and also Trump and Putin. We didn't see any sort of supply disruption coming from oil. So Brent crude right now is a bit flat, though we did see, but we are seeing Brent trading at about $65.90 a barrel there. And of course, safe haven demand helping to lift gold to start the week a bit higher. Gold is up more than 0.5% right now, trading at about $3,354 an ounce. And just to bring you our terminal chart for this morning, and that is coming after that summit in Alaska between Trump and Putin. There weren't many breakthroughs, as we were mentioning, and actually this chart is showing the probability of a truce this year have remained basically unchanged coming out of that meeting. The question is, what, if anything, does this mean for the meeting later today at the White House between European leaders, Trump and Zelensky? But let's check in on how markets in Asia are faring. Min Min Lo is standing by in our Hong Kong studio. Min Min, a bit of a stronger start over there for equities. What are you watching?
Yes, we have Asian stocks largely slightly on the upside today as we look ahead to that potential truce. But I'm watching the yen very closely because we are trading around 147.39 now. But as we look ahead to that Trump-Zelensky meeting, BOJ Governor Ueda is saying that maybe USD JPY could head higher above 148 as that safe haven demand for the yen fades if we get a trade truce, a ceasefire between Ukraine and Russia. And of course, we are looking ahead to the CPI print from Japan on Friday as well, expected to show inflation remaining sticky above 3%. So on the flip side, we also have our own MLife strategist saying that maybe the yen could emerge the winner after Jackson Hole, depending on the commentary coming out of J. Powell and Ueda as well. And of course, so we have the CPI data. We're also looking ahead to the bond auction tomorrow, the 20-year bond auction. That's expected to put further pressure on Japanese bonds as we see the yields pointing up today. And flip the board, we're taking a look at what's happening in China because we're seeing this very interesting rotation. Here you can see the bond yields continuing to tick up and the Shanghai Composite a steady increase since April of this year and really hitting this record, not record high, but a 10-year high of the Shanghai Composite. And so this rotation to the equity markets is really interesting given the backdrop of the weak economic data that we got last week, including on the housing data, the activity data, the credit data as well, and it appears that retail investors in particular are really shifting to look for higher yields among equities given the low interest rate environment in China. Jen?
Thanks so much, Min Min Lo in Hong Kong for us there. Min Min, appreciate it. Let's turn to the Middle East. Hundreds of thousands of Israelis have rallied amid a nationwide strike demanding an end to the war in Gaza and a deal with Hamas to release the remaining hostages. Organizers of the biggest protest in Tel Aviv say 500,000 people gathered in what's now known as Hostage Square. Let's go to Jerusalem now and speak to Bloomberg's Dan Williams. Dan, talk to us more about the protests and what the reaction has been to what we saw over the weekend.
Good morning. Yes, very significant protests. We've seen these over the last 2-3 years, actually, even before the war. In Israel, there were nearly weekly protests against the Netanyahu's attempts then to overhaul the judicial system. And during the war, obviously, given the country's rallying around the flag in the face of Hamas, those protests abated, but now they seem to be back in full force, including culminating last night in those hundreds of thousands of people in Tel Aviv. Netanyahu, the prime minister, is defiant. He says these people would effectively capitulate to Hamas at the last stage of the war and endanger national security in the interest of short-term gains. So it would appear that for now the government is not moved by this, but this has been several months in the works. For several months now, polls have showed that Netanyahu is out of touch with majority opinion in his country. Given that he runs a conscript military, that may spell major dissent in the future, but for now it appears that he's plowing on with his plans for this war.
Well, and Dan, it's also been quite a few days since we heard that Israel said that it would seize Gaza City. Why has this not happened yet? Is there reluctance within the government potentially?
Well, Gaza City is a big target, but yes, indeed, there seems to have been a lot of talk and a rather staggered approach to implementing this takeover of Gaza City. It's been 10 days now since the Security Cabinet gave a green light. We understand the military just yesterday approved operational plans. We're expecting potentially call-up orders for thousands of reservists this week. It's quite clear, though, that the Israelis are leaving a door open for a resumption of truce talks with Hamas on better terms as far as Israel is concerned, and are hoping perhaps that the noise around this preparation for what they're describing as a final push against Hamas might be enough to prod Hamas into re-entering those talks and reviewing its conditions.
Bloomberg's Dan Williams in Jerusalem. Dan, thanks so much for your reporting, as always. And now back to our top story. Ukraine's President Volodymyr Zelenskiy is gearing up for another critical face-to-face with President Trump. He's headed to Washington, flanked by several European leaders, as Trump sets out the terms for a potential peace deal he discussed earlier with Russian leader Vladimir Putin. Earlier today, we got perspective from Dalibor Rohac, senior fellow at the American Enterprise Institute. Here's some of what he had to say.
Vladimir Putin offered nothing in terms of concessions, nothing in terms of constructive proposals to end the war. He just regurgitated his maximalist demands, and yet now the U.S. president seems to be under his spell, putting the onus on Ukraine and the Europeans, as you put it, and that really puts Ukraine and Europe into a hard spot, thinking that perhaps the United States is no longer the guarantor of European security, no longer a trustworthy partner, but an emerging ally of the Russian war effort.
So not a great starting point for Zelensky when it comes to this Monday meeting. Doesn't matter whether or not he has the European leaders on his side. How much room to maneuver to actually negotiate terms?
I mean, the real question for President Zelensky and for the European leaders is whether the U.S. approach is really set in stone, whether this is the course that the U.S. administration is going to be following, or whether there is any room for changing hearts and minds, because it is very easy to demonstrate that making concessions to Putin, trying to appease Putin, trying to push Ukraine into an unfavorable deal that only enables Putin to rearm and restart the war a few years down the line is not in the U.S. interest, even not in the personal interest of Donald Trump, who a few months ago negotiated this minerals deal with Ukraine, and basically giving away Ukraine's land to Russia jeopardizes that very deal.
That was Dalibor Rohac, senior fellow at American Enterprise Institute, speaking with Bloomberg's Haslinda Amin earlier. Now, here's a look at some of the other stories we're following out of the African continent today. Zambia's government is downplaying pollution fears after February's toxic waste dam collapse at a Chinese-owned copper mine. Officials say drinking water is safe, even as tests found heavy metals, including manganese, at 400 times the limit in rivers near the site. Cleanup after the accident has yet to begin, raising fears that the contamination could spread further. Tensions are rising in Ivory Coast as thousands protest President Alassane Ouattara's bid for a fourth term. The demonstrations were led by former President Laurent Gbagbo, who called for the West African nation to oppose Ouattara's plan to remain in power. The 83-year-old incumbent announced his plan to run earlier this month, saying a 2016 constitutional change allows him to extend his rule, but opponents argue it undermines democracy. Nigeria's inflation eased for a fourth straight month in July, adding pressure on the central bank to cut record-high interest rates. The CPI slowed to 21.9% on a year-on-year basis, helped by a stable currency and lower gasoline costs. While food inflation ticked higher, economists say the upcoming harvest and better fuel supply could drive prices down further, potentially opening the door for a rate cut as early as September. Now, coming up, we speak to Nonresident CEO Michael Belton about Dubai's booming housing market amid record sales. Stick with us. That's next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Bloomberg has learned that Saudi Arabia's sovereign wealth fund exited positions in several U.S.-listed stocks in the second quarter, including Meta, amid President Trump's tariff policies. The $1 trillion public investment fund also sold holdings in FedEx and Shopify, while Meta was among its biggest exits. The total value of the PIF's U.S. portfolio stood at $23.8 billion, down 7% from the first quarter. Now, Dubai's housing boom began in late 2020 when the UAE's high COVID-19 vaccination rates, rapid reopening to tourists, and liberal visa policies began to attract more foreign buyers. The Trump tariff volatility has only lifted the market. Let's get the outlook now with Michael Belton, the CEO of Dubai-based developer Nonresident. Michael, thank you so much for joining us. So we've seen Dubai be courted by a number of tourists, European, Indian, Chinese. What has changed now, would you say?
What we're seeing is that the people that are coming into Dubai right now, and there's a lot of them. Last year, we saw population growth of about 3%. They're coming here to set up their businesses. They're coming here to bring their families in, and they're coming for the long term. Where in the past you had expats who would come in for maybe 1 or 2 years. Now people are moving their families in and actually planning on retiring. So on the residential front, people were coming looking for commodities. Now they're looking for lifestyle. They're looking for long-term properties and homes where they can live. We don't see flipping anymore. We see people who are really moving in. And another interesting factor is if population went up by 3%, the amount of school enrollments grew 8%. So we're seeing a different clientele that's coming into the market. With all of the problems going on internationally, it's making people want to come to a safe place, a place where the taxes are, as you know, income tax is zero. So it's a place where people are coming to really set up business and to stay here permanently.
How much would you say, Michael, currency dynamics are playing into this as well? You mentioned taxes there. Do you think that's a part of the story?
Well, as you talk about currency, with the UAE being pegged to the U.S. dollar, with the dollar diminishing in value, it's making the market more attractive for a lot of other markets. 85% of our buyers are Europeans, so they see an interesting opportunity to come to set up business and to be here. And again, the taxes do mean a lot. If you're paying 40 or 45% in taxes at home, if you come here and make the same amount of money, you're doing well. But oftentimes people are making 20 or 30% more as an employee. So it's a very, very interesting opportunity for those who want to invest and to be here long term.
Can you talk about that a little bit more, Michael? Because I wonder, from the Nonresident perspective, who is your clientele? Is it people who are wanting to be in Dubai for the long haul, or is it people maybe wanting to set up shop as a second home? Who do you cater to?
No, we cater, as I said, we're about 85% European, and it's people who have come here with families. That they want to have a property that's not just bricks and mortar. It's something that offers them a lifestyle. We're building a 300-meter tower designed by Pininfarina just outside the Palm. People like the European vibe. They love the views. They love the amenities. And I think that if you look at property values in general, Dubai versus Europe, Dubai versus the U.S., it's still a very affordable and attractive offer. And also in in Dubai, people's investments are secured through the escrow system. So when someone buys a unit, they're on a payment plan, whether that's 30/70, 40/60, or 50/50. Over the term of construction, they're paying usually about 10 or 15% a year, which makes it very affordable for them to enter the market. But again, people are coming to really set up shop. The population is growing in Dubai and in Abu Dhabi. We are also entering the Abu Dhabi market later this year with launching a very large project. So we see interest in about all of the Emirates. Dubai is leading, and then Abu Dhabi is right behind it.
How do you view the risks potentially, Michael, of oversupply? If we're talking about potentially 250,000 new homes in the next few years, we could potentially enter into a bubble at some point.
Well, I think that there's always cycles in real estate, but what we're seeing is that the people continue to move here. And if you look at the stats from the UAE government, they still believe that they're behind of about 200,000 homes this year alone, and the population is continuing to grow. So with the influx of people, I don't see a bubble. In the past, people would buy these properties and not occupy them. Now I think the Palm is 98% occupied, Blue Waters is 99% occupied, and we're just seeing this growth. When you look at Abu Dhabi, there's a tremendous amount of investment going in. I think you know that Miral is bringing in Disneyland. We have all of the AI initiatives and all the crypto initiatives. So you have all these young people that are coming to set up shop. I don't think they're going anywhere soon.
What's the risk, though, Michael? Because this does paint a great picture of the markets there. But what potentially keeps you up at night if you think about sort of the trajectory of profitability for the company?
Well, I would say that for Merid, it's for me as a CEO, it's just kind of managing growth, because it's very easy to go from fifth gear to 10th gear. For me, it's to manage growth, at the same time take advantage of the opportunities, because there is an opening in this market for the developers that have come internationally here. I think that the larger, we would call them either the giga developers or master developers, don't have the touch and feel of their clients like we do. So it's just managing growth and trying to be successful in the long run.
All right, we'll leave it there with you. Thanks so much, Michael Belton, the CEO of Merid, joining us in our Dubai studio right there. And for more of these stories, looking into the intersection of wealth and power in the region, sign up for our Mideast Money newsletter at Bloomberg.com. Now, coming up, China in focus with EVs and big tech set to report this week. A preview next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasadja in Johannesburg. We have more big tech earnings in China this week, with Xiaomi set to report tomorrow. Baidu will be another key name to watch as it struggles to monetize its AI efforts. Let's get more with our Asia tech correspondent. That's Annabelle Drewlers in Hong Kong. So, Annabelle, let's start with Baidu. What exactly are we expecting here?
Yeah, probably actually not a great set of numbers. Baidu is an interesting company in China because it was seen as really one of the front runners or the early leaders in the AI race. But since then, it's really had to cede a lot of ground, not only in terms of the popularity of its chatbot, Ernie, but also in the way that it's able to monetize its AI operations. And so as a result, our Bloomberg intelligence team is saying that the outlook looks still highly challenged going into these figures. They're expecting weak results that is certainly set to perhaps further undermine the company's growth prospects as well. So that's sort of the Baidu story. What's interesting, though, on the AI story as well in terms of earnings this week is what we'll get from Kuaishou as well, because this is where we've seen a lot of focus on its own AI tool, that's Kling AI, and that's certainly been generating a lot of hype. But again, the company has also been making a foray into food delivery, another very competitive space in China as well. And so it has been a little bit under pressure of late. Bilibili as well, another name to watch in the tech space this week, given that it should be posting a 20% rise in quarterly revenue. And that's as it sees more active users and also better advertising sales.
And also, Annabelle, talk to us about Xiaomi, because that is something that you're paying very close attention to. What is it that we should be watching for?
Yeah, Xiaomi's a really interesting company in China. So it's had a stellar run over the past 12 months, but even longer than that. This company is one that has sort of three different pillars. There's the smartphones, it's got its IoT or its home appliances, essentially its internet of things, devices, and then also the EV sector. So overall, we're looking at revenue growth of around 30% on the year, or sales rather could have increased around 30% on the year. Smartphones is the bread and butter, and it's going to be sort of in the mid-single digits. That's what our Bloomberg intelligence team is expecting. IoT should continue to perform well, given that there are still subsidies and trade-in programs in place in China. And then lastly, EVs will be really closely tracked, given that this is sort of the newest business line for Xiaomi, but one that's continuing to contribute more and more revenue. So that will be very interesting as well, because not only does it contribute more revenue to the bottom line, it also starts to improve the economies of scale, and that contributes to the gross margin, which our Bloomberg intelligence team is saying could have improved to 22.5%. In this latest quarter. So that is going to be really probably one of the highlights in terms of the Asia Tech reporting this week.
Fascinating. We didn't even speak about Labubu dolls, but we'll leave it there with you. Annabelle Jewelers, Bloomberg's Asia Tech correspondent, thank you so much for joining us. And you can join Annabelle and Sherry on for Bloomberg Tech Asia at 8:30 a.m. Hong Kong time on Friday on Bloomberg Television. Subscribers can also watch on the terminal using our TV Go function. And a quick check at what else we're following. Machines made by Unitree Robotics have grabbed the spotlight at the World Humanoid Robot Games in China. The company's H1 robot won gold in a 1,500-meter race with a listed time of 6 minutes and 35 seconds. The 3-day event hosted in Beijing was the latest showcase for China's challengers to Tesla and other U.S. companies in the emerging field of advanced robotics. I don't know if I am pleased by that or if I'm terrified, but that is fascinating there. Let's take a quick check at where your markets are positioned ahead of the trading day. Of course, we mentioned investors very focused on the outcome of the meeting between President Zelensky, European leaders, and also President Trump at the White House later today, especially following that meeting with President Trump and Putin on Friday. We are seeing green on the screen, at least for U.S. equities, and also potentially a stronger start for European equities, with the Euro Stock 50 futures up just about 0.2% there. We are also paying close attention to what we hear from Fed Chair Jerome Powell. That is coming at Jackson Hole later this week. But investors squarely focused on what the outcome of that meeting could be. And also, if we take a look at oil, fluctuating since those talks between the U.S. and Russia ended without a clear breakthrough on Friday. We're seeing Brent crude trading quite flat right now, but we did not get any major geopolitical escalation or supply disruption. So we'll see again what comes out later today. That is it for Horizons Middle East and Africa. I'm Jennifer Zabasanja in Johannesburg. Stick with us for Daybreak Europe. This is Bloomberg.